What's up, guys? Mike here. I got another stock for you guys today, and it is another SPAC stock, and that stock is none other than Apex Technology, ticker symbol APXT. Soon it is going to be merging with AvePoint, and the ticker will be changing to AVPT, and it's soon to be announced to be merger sometime around Q1 2021. So it could be probably around February, March. I'm leaning more towards the end of March. I think is the time that they're going to be possibly merging. So we're going to go over all the technical analysis, the charts, where I think you should be buying this stock, what the stock is, what this company is actually doing, what's the company's purpose, and where I think this stock could lead to up to the merger point, and where you guys should be targeting your buys and sells for this stock. I'm going to go over all of that in this video. So make sure you guys always smash that like button, hit subscribe. I don't want to waste any further time. Let's just begin. Yeah. All right, guys, let's check out what's going on with Apex Technology. Ticker symbol is APXT, soon to be merging with AvePoint. So as we can see, first it had its nice run up. It went all the way to around 17 bucks twice, and now it's having another pullback, and right now it's trading around $15 area. I think this stock is still a little bit too overpriced for me to get in. I do not have any shares right now personally. So I think right now this stock is a little bit too pricey for me to touch or get into. It is, however, trading above the 20-day moving average as well as the 20-day exponential moving average as well. But right now, I think this stock is going to be on a pretty much downturn coming up within the next few days. SPAC hype is a little bit dying down the past few weeks, and I think it's going to continue going down on a little bit more downturn. Where would I start buying? I think what is a fair value is somewhere between 12.5 to 13 is a fair value right now before the merger to start getting in. I would definitely love to load it if it goes under 12.5, but I think 12.5 to 13 is the area I would personally start adding. I would not buy anything above $13. I just feel like it is not worth the price right now, about $13 or above. And I would wait. And as you guys know, the merger isn't going to be happening anytime soon. It's going to take about the next 2 to 3 months for this merger to happen. So there's plenty of time for this stock to continuously go down. Do not expect the stock to stay up and keep going up. Even though it is merging with a cloud software, that's what is AvePoint. It is a cloud software company for data management for like Microsoft users and customers, and they have products for that Microsoft use. That is pretty much what AvePoint is targeting, and I'm going to go over that a little more detail. I'm going to give you a lot more detail on that, and I'm going to go over that so you guys understand what the company does and what the company is doing. But I think right now this company still has plenty of room to drop over the next 2-3 months. Somewhere between 12.5 to 13 will probably be where we're going to be seeing it, and it's going to trade around that area for a bit. It might even drop all the way under 12 bucks. It could happen. I don't know. If it does, that's where I would definitely be loading up and holding it until merger. It could be a definite zone. But everything right now is pointing downturn. MACD just crossed over. TSI crossed over. The histogram is pointing downwards. Everything is pointing down. RSI is cooling down right now. Everything is pretty much on a downturn, right? So I wouldn't touch this. It does seem to have some support around $13.50. So this could hold, but usually with a 1 to 2 day hold, I doubt it. It probably will most likely drop to 12.70. And if you think it'll stop at 12.70, it could probably even hit 12.5. So that's why I'm saying 12.5 and under would be very ideal to target and get in. There seems to be some a little support level around the $13-14 area right now, but there's 2-3 months left before merger, guys, so I highly doubt the support level will hold very strongly. Let's go over what AvePoint is, right, guys? AvePoint is pretty much a software company that manages data for pretty much Microsoft cloud users, right? They're targeting pretty much, their focus is on Microsoft customers and their products, and they're trying to take a little bit of the market share from Microsoft. Let's go a little bit further down into this, and pretty much, as we can see, they're pretty much they're targeting to be estimated revenue growth to be around $33 billion in 2022. They think that's what their market will be growing to, and they expect the growth to be around 2022 to be 33 billion. They have over 1,300 employees, 7 million cloud users right now with 16,000 accounts. And these are all a lot of Microsoft users, right? They have strategic cloud partners with Microsoft. Their growth vectors, all that you guys can see if you like. You just pause the video and go ahead and read it through if you like to do so. I'm not saying they don't have room for potential. They definitely have room for growth. This is pretty much a mini Microsoft cloud stock, and Microsoft right now is extremely expensive. So just think of it as a mini Microsoft that you guys could buy. It's pretty much still an independent company, but it does rely on Microsoft customers. So they are supposedly being a very fast-growing data network. They have protection and backup on who can access, alert, delete, audit, and stuff. And right now there's some issues with privacy and cybersecurity, and they're trying to help prevent some of these. So this is pretty much a cloud stock with a niche that it has that they have potential to grow definitely over time. So pretty much what they're doing is they're pulling in Microsoft users to use their products. So here are a few things that they do have available. Feel free to look over the chart and see for yourself, but it pretty much they're using tools that Microsoft uses on their cloud websites and the infrastructure. So they're kind of taking Microsoft users and giving them a better experience with their products as well. So here are a few things that they do provide, which Microsoft does not. They're trying to compare themselves to Microsoft because they are trying to give customers a better service that Microsoft does not already give them right now. So feel free to look it off and read it. Feel free to pause the video, check these out. And as you can see, they have a very compelling amount of different new ideas that they're trying to put on their customers and trying to grow customers and trying to bring in Microsoft customers because they offer these other special services that Microsoft does not. So right now they're saying Microsoft has about 250 million users and expect in the future that Microsoft is going to grow to about 500 million users. Right now, AvePoint only has about 3% of the share, 7 million users, and they're expecting that share to increase to 10% and 50 million total users over time. This company definitely has a lot of room to growth. Here are some of the people, the customers that they can target and use, such as communications, retail, some pharma companies, financial services, government, and some high-tech cloud customers they could bring into their industry and use their software. All right, so let's look at some of the merger terms. They are saying to be valued about $2 billion post-merger, and $140 million is going to come from the PIPE investors directly. So let's take a look at where the valuation really is and where you guys are going to be standing at once the merger goes through. Once the merger goes through, you guys are the Apex shareholders. You're only going to be holding about 17.6% ownership in this company. The rest is just going to be private, about 3.3%, and 7% is going to be PIPE investors, and the rest is just going to be AvePoint itself, its own shareholders, about 72%. So they're pretty much taking a huge chunk of it. And the company, as you can see, is valued at about 1.99 billion, 2 billion total for simplicities. So it's not a small company. It's a pretty large $2 billion company that definitely has room for potential to grow definitely over time. If we were to look at this market cap right now at $15.74, the market cap right now is trading about $700 million worth of this company, which is pretty heavy high right now, even for this company. So I think buying this is a little bit too pricey, especially around $15. And that is why I think buying it around $12.50 to $13 seems much more reasonable value for you guys to get in. Besides, besides just jumping into for the hype and expecting this to grow until to like $20, right? So I think you guys should definitely wait before you jump in. And if you're already buying it at the top, make sure you guys definitely average down once this company does go down to around 12.50, 13. Especially, I would love it to go under 12.50, and anything below 12 is 100% a easy opportunity, easy buy zone for sure, without a doubt. That is not when you should be selling. That is when you should be loading up and doubling your shares into the company. All right, so let's look at this company's financials. They're estimated to bring in $148 million by the end of 2020. And by 2022, it should be about $257 million. So that's about almost a double in growth, which is pretty good for this company. I still think the valuation is a little bit too high for me. I think even with the high growth rate of this company and the market potential it has, especially with Microsoft customers that it's targeting, it could still be a good opportunity over time. Right now, I think it's just a little bit too expensive to get in. I'd wait for the pullback and then get in. And if anything, this could be an opportunity for Microsoft itself to actually buy AvePoint out, right? They have like a ton of money, over hundreds of billions of dollars sitting on cash right now, right? Microsoft is a huge over $1.5 trillion company, almost $1.5 trillion, but they're worth way over $1 trillion, and they can easily, they have over $100 billion sitting in cash, and buying this company for $2 billion is pretty much a speck of dust for them. So they could probably even end up buying this company, and this stock could splurge into a huge amount. So there is some huge potential with this company. I would still wait for a pullback and then wait for it, because there is going to be another 2-3 months before the merger does get voted on, before the merger goes through. Thanks again for watching my video. As always, make sure to smash that like button, hit that subscribe button, hit that notification bell so YouTube could alert you when my next video comes out. Also, feel free to add me on Instagram. I do post pretty much daily. Anything I see important, I do post there. Anything I buy or sell, I also try to post there as well. So make sure you guys follow me on Instagram. If you guys have any questions, leave a comment below. Let me know. If you have any stocks or any videos you'd like me to do on a specific stock, or you have a question on a stock, leave a comment below. Let me know, and I'd be happy to help you out or make a video on that specific stock. Also, guys, right now, WeBull is giving 4 free stocks, 1 for just signing up to use their platform, and 3 more stocks when you make a deposit of $100 or more, and WeBull will give you 4 total stocks with a minimum of $8 all the way up to $1,600. Check the link in the description box below. If you guys want another free stock, FirstTrade gives pretty good stocks. Check the link for that. And also, if you want another free stock, Robinhood gives out a free stock as well. All those links are down in the description box below. Thanks again for watching my video, and until next time, make money with Mike.